Sup guys, and welcome back to the channel. In today's video, I'm going to be discussing which one is the better strategy, long-term investing or day trading. And basically the way I'm going to construct this video is by breaking it down and judging the two strategies on what I think are the 5 main areas. And that is number 1, the capital required to start. Number 2, the costs of doing each one. Number 3, how much time each one takes. Number 4, the amount of risk involved. And then finally, number 5, the type of person you have to be to do each strategy. Following on from that, I will then give you my own personal verdict on which one I personally think is better, and then hopefully by then you should have a really good clue on which strategy is best for you. So if you are looking forward to this video, make sure you hit that like button and subscribe to the channel if you haven't already. But having said all that, let's get straight into it. Okay, so just before I get into the comparison, let me just give you a quick 20-second explanation of the difference between investing and trading, because some people didn't even know there was a difference in the first place. So it's as simple as this. Investing is where you simply buy a stock and hold it for the long term in the hope that you potentially sell it for a higher price in the future. And trading is simply where you are actively buying and selling shares to make profit on a daily basis. So let's kick things off by talking about the amount of capital required to start each strategy. And let's start off with day trading, and basically the costs are not cheap. For example, in the USA, it is actually a legal requirement to maintain an account balance of at least $25,000 or more to actually be given a day trader status and to be actually allowed to do this in the first place. So straight off the bat, before you've even made your first investment, to have that kind of money to start off with is a very, very large investment to start off with, especially when you are a beginner. From there, if you can manage to get that approval, it's very much down to risk management when it comes to judging how much capital you need. Because you are constantly trading stocks, the recommended amount of risk that you should put per trade is actually 1% of your total capital. So basically, if you wanted to be able to trade £500 a day, that means you would need to have an account balance of at least £50,000 to be able to do things properly. Obviously, this is just a guideline and you could be more aggressive, but one thing you should really take seriously. Moving on to investing, and it's pretty much the opposite to trading. You can actually start investing with as little as £10, and that's about it. My first ever investment, in fact, was at around £100, and this was about 4 or 5 years ago, and I still hold that investment to this day. Next up, we have the costs of each strategy, and this time let's start off with long-term investing. And basically the costs that come with long-term investing very much comes down to a couple of things. Number 1, the stockbroker you use. Number 2, their commission structure. And then number 3, the account fees that actually come with that account. For example, some brokers may offer a completely commission-free trading structure, but they will come with a larger account fee per year, or maybe even a withdrawal fee. On the other hand, some may offer completely free account fees and withdrawal fees, but then may charge a commission per each trade that you make. Moving on to the day trading cost, this is something in my opinion that has been a lot more accessible with the likes of these commission-free trading apps coming onto the market. Before, if you were paying a commission per trade, brokers used to offer incentives where if you were to place X amount of trades per month, your fee would reduce. However, just like I mentioned, with a lot of companies offering free trading, this isn't really much of a great deal anymore. So in terms of which one costs you the least, it's pretty much a draw on this case, and is very much dependent on the stockbroker you use. Alright, so we're absolutely flying through this, and let's actually move on to the time it takes to do each one, and this time let's start off with day trading. For me, with day trading, it is something you have to be completely focused on at all times of the stock market trading day if you want to do it properly. You will need to be analysing charts, looking for certain trends, checking news articles, and keeping an eye on certain positions that you already have open. Now, I know some day traders would argue this point and say that you could actually place stop loss orders where you can basically instruct the broker to place an automatic buy or sell orders for you, but for me, when you're risking potentially thousands of pounds or dollars on every single trade, I would personally need to be there giving it my full undivided attention. Moving on to long-term investing, the only real amount of time you will need to be spending on this is when you are researching a company, and maybe when you decide to check your portfolio performance from time to time, or in my case, pretty much every day. But just going back to the time it takes to research, this could potentially take anything from 1 hour all the way up to a couple of months. For instance, I actually still have companies in my current watch list that I haven't invested in yet, but I'm still keeping an eye on it and researching it potentially in case I wanted to invest in it for the future. Of course, this is very much passive research, but it's very much different to checking a pattern or a piece of technical analysis and just clicking buy. So in terms of the time each one takes, investing for the long term takes a very much passive approach approach where you do a little bit of work up front and then you sit back and hopefully see the benefits over a long period of time, whereas day trading, you're very much going to be actively working on a day-to-day basis. Okay, so now let's jump into something a little bit more juicy and let's take a look at the risk involved with each strategy. Now, before I do, one obvious thing to point out is that any kind of investing and trading will present some form of risk. You will never find a business opportunity out there that provides zero risk, but there are definitely some different levels to it. So starting off with long-term investing, this one actually very much depends on the types of companies you're investing in. For example, if you were to invest into an index fund that tracks 500 companies, there is going to be much less risk in doing that than just buying an individual stock. On the other hand, if you were to invest into a brand new company that's really small opposed to investing into something big like Coca-Cola or Apple, which I know are massive businesses, there is going to be much more risk in that. So basically with long-term investing, when it comes to risk, it is very much based on the decisions that you make yourself as to how much there will be. But one thing I must say is that most of the time, and I mean for 90% of big companies, if you hold on to that business long enough, which you should be doing as a long-term investor anyways, they normally go up over time. For example, let's take a look at Apple stock recently. As you can see, it doesn't actually show many great returns in the short run, but if we zoom out a little bit, you can actually see the growth of the stock price over a long period of time, and it's safe to say it's done pretty well. Once again, let's do exactly the same for Disney stock. If we take a look at Disney's performance recently, it's actually been doing quite poor, but once again, just zooming out and looking at the bigger picture, you can see how much money you would have made if you invested into that stock over 10 years ago. Now, moving on to day trading, the risks are going to be severely higher, and this is because of a number of reasons. Number one is because a lot of the time day traders actually use something called leverage investment strategies like options trading or margin trading. This is basically when they use borrowed capital to purchase stocks, and basically if things went south, the losses actually add up much quicker than traditional investing. One thing to mention about placing short trades and margin calls and options trading is that the rewards are so much higher than just going ahead and placing a standard investment. But of course, when you break it down with day trading, the risks are so much higher, but the short-term rewards are so much better. And with long-term investing, the overall risk is lower with much more consistent rewards, but over a long period of time. All right, so finally, let's now move on to what type of person you have to be to do each strategy. And maybe if you're still watching this video, you've already got a little bit of a clue. So basically, let me say one thing for both of them before we actually get into the comparison. If you are making any kind of investment, one thing you need to be able to do from a type of person point of view is to be in control of your emotions and understand exactly what's happening. And this couldn't even be more true with long-term investing, because just like I demoed with the chart earlier, during your time of holding a stock, you're going to have up and down days throughout the entire time. There's going to be some days where it looks like the stock is completely finished and the company is possibly going bankrupt, but there are also going to be some days where it looks like it's going to the moon. The key is to keep a level head. Moving on to day trading, yes, of course, you still need to be very level-headed, just like long-term investing, but you also need to be more of a risk taker. Also, just going back to what I mentioned about only risking 1% of your capital at a time, you also need to be very disciplined, and you need to be able to once again not let your emotions take control of you at that time. One thing I actually hear quite often is that professional poker players would make great day traders because they are so well disciplined with their bankroll. However, your day-to-day gambler would be an absolutely terrible day trader, because normally when they have a bad beat, they normally double down and try and win their losses back, and this simply is just a danger when you are trying to do day trading. Alright, so as promised, I said I would say which one I personally prefer, and if you know me by now on this channel, you already know the answer of this one, and that is definitely long-term investing. This is for a number of reasons. Number one, with me running this YouTube channel and other businesses, I simply don't have the time to be sat in front of a chair all day looking at charts. Number two, I am also very much a big advocate of believing in long-term for pretty much anything I do, not just investing. And the final thing is that I actually like owning part of a business, and long-term investing ticks all of those boxes for me. However, that is just simply my opinion. You may have just watched this video and thought day trading could be better for you, but nonetheless, make sure you do your own research, understand the risks and expectations, and everything should work out okay. Apart from that, if you did find any value from this video, it would mean a lot if you left it a like and subscribe to the channel if you haven't already. Also, let me know what kind of investor you are in the comment section down below, and I will catch you guys in the next one. Take care.